Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Paul Duran, and Paul is a Senior Vice President at Bridge Bank. He's been at Bridge Bank for about 3.5 years, with a number of banks before that. His longest relationship with Comerica, he was there for 18 years. He's over 30 years in banking, actually started around 1982 with Crocker Bank. That might be an interesting name to some of you to hear again after so many years. Anyway, Paul consults with dozens of companies annually on how to get the most out of their banking relationship with their bank. And he's written a number of articles. He was telling me this morning he's written articles for the San Jose Business Journal, Silicon Valley Business Journal, I guess it's called now, about financing options for middle market businesses. And he regularly makes presentations about this topic for professional organizations. He has a lot of partners who helps to extend the amount of resources that he brings to helping clients achieve their desired objectives. And a team approach is used to help everyone to win. And especially, he says he's worked across numerous industries with a large variety of lending situations. His approach is to consult with his clients and prospect and try to find the best approach to resolving their challenges. And again, these solutions may involve many of his partners and friends. So, Paul, thank you for joining me today.
Thanks for having me, Michael.
So, Paul and I have actually known each other for many years, so so this is an interesting experience for us. Okay, well, again, thanks for joining me. Today we're going to be talking about small business financing. And so Paul has a lot of background in that area that I think he'll have some great information to share. So, Paul, we sort of had a moving picture, I think, to some degree, with the financial contraction that happened back in 2008 and so forth. Maybe you can tell us a little bit about, how things have changed, or what's the picture these days in the banking industry?
Well, I think in the banking industry itself that there's always been a willingness to lend. It's been kind of interesting because, as you've just said, a lot of people thought there was this contraction in credit in small business, and really what the Federal Reserve studies are starting to show is, yes, for a small amount of time there was a contraction. There was a willingness to lend, and with government aid coming in from 2009 on. It was more interesting to me, and having worked in the field, was actually there was one of the things that did happen was a contraction in demand. So businesses haven't been borrowing as much in the last few years, which is natural because what you have is people need to be confident in the economy and their hopes of repaying some debt or an investor before they'll really start to expand on hiring. Now we are starting to see that. We are starting to see businesses expanding. We are seeing businesses growing, and it's, it goes back to this whole thing, why we as bankers like to lend, and there's selfish reasons, but one of the reasons is we know that small businesses is one of the biggest generators for our economy and economic growth. We know that's where the hiring takes place. And the government does too. So it's, there's always been a willingness, and I'd say, the banks have been willing to lend for quite a while now.
Okay. So I think we'll move on here. How does a bank evaluate the creditworthiness of a small business? What are some of the underwriting criteria that you look at when you're looking to make a loan?
It's kind of, well, first let me just kind of talk a little bit about the word small business, because that's kind of a word that there's a lot of gray to it. There's a lot of different definitions out there what it is, and even within the government or wherever. We have kind of different segments in there, and what you also find is that there's not necessarily a uniform approach to underwrite. We're going to take, there are some very common characteristics that banks are going to be looking for. They're going to be looking for a primary source of repayment. Does the business cash flow? Does the business have the ability to repay the debt that it's requesting? Very fundamental. Or can it, through projections or whatever, show that it will have the ability? We also look for secondary sources. That's where collateral, things like AR, come in, as well as maybe guarantor support. Most small business loans, the principal's going to have to stand behind it and offer a guarantee. So we're looking at primary and secondary sources. And they vary. You know, it's really hard to put a blanket statement like I say. I'm not going to tell you that there has to be these numbers here. So that's some of the basic criteria of lending, the fundamentals of credit. But additionally, we start to look at different banks have different approaches.
Okay.
For many people, small business lending, and their definitions vary, will be an application that's run through a center, credit scored, based on your personal credit score many times, and they issue kind of like, in essence, a checkbook or a giant credit card. Whereas a community bank is more likely to a traditional line of credit. Terms can vary, but they're more likely going to ask for financial information and more on reporting and customize the facility a little bit more. Both have very good, serve their clients very well. It just depends on the need of the client. We also have seen a development in micro business lending, which is different because now a lot of people say small business. Well, there's also a lot of small businesses who don't need a huge amount of money. And we're seeing development of alternative sources there. Lending Club, On Deck, these type of internet platforms who are putting together and cobbling together a small business. We're also seeing government funds, like government opportunity funds, or where banks have joined in and have provided these different community funds. They vary from community to community, but there are a lot of different programs. So criteria vary. What I find, really, when you're dealing with small business lending, is finding a banker who can really talk about it. That, can you develop a relationship? Can you have someone who takes the time, understands your business? If there's one thing that the downturn taught us, as we went through this contraction of credit, that one of the things I think a small business owner wanted to have was that advisor and a banker who could have a relationship with them. Also, could be an internal advocate for them because they could explain to people. Because many times, remember, banking is a regulated business. We have to explain to others why we make our decisions. Could they find a banker that would be willing to explain what was going on, the goals, objectives, how and why we were going to get paid back, and do so because they knew the business, they know the owner. Could they also then take and suggest things to the owner as well? Be a trusted advisor. So I guess in really kind of your question, what are some of the criteria? And I can go on and on about a lot of that. It really varies, but it's fundamentally, can you pay me back? Because you have to remember, my risk spectrum is not huge. I also want to kind of quickly mention on this is what bankers do. I mean, we take grandma's money. I always call it grandma because I can picture my grandma putting her money in the bank. Okay. I take that money, I rent it out. That's you, like Michael Gray, the business guy, to your firm. And I'm doing it because I think you can pay me back because at some point, grandma's going to want her money back. And I always remember that I have to give my grandma her money back. So that puts me within a risk spectrum. People say bankers are conservative and everything. No, that's just kind of understanding that this is my risk. I'm using public's money and I want to be able to pay them back as well. And I guess it gave a long answer, but the short is that we're kind of looking at what can you repay us. Okay.
What are some of the things that you look at, in this thought process about whether you think somebody can pay you back and so forth, whether they're a good credit risk?
It depends, again, on the size of the business, the needs, and what they're doing. But generally, we're going to look at the balance sheet of the company. Is it highly leveraged? Is it low leverage? In other words, the amount of debt to the net worth of the company. You don't want it too highly leveraged because that increases the risk of failure. It increases the risk you're going to get in trouble. Does the company have good liquidity, working capital? Many small businesses are actually undercapitalized, or they're trying to do so many things that they just can't have the capital for growth. Well, you're going to look at that. Is there do they have enough to take care of their needs, accommodate growth, or are they just going to end up in trouble? Growth takes capital, and do they have access or sources to capital besides banks financing in some cases? And that comes into what is the owner's net worth and things like that. We're going to look at maybe the things have like receivables. Receivables are collateral banks like, and some of the other. We also, besides just, and when I think of these statements, I also am thinking not only just of the traditional conventional bank, but there are sections in banks and other alternative lenders who sometimes go on the basis go on that collateral? Is that collateral going to allow someone like that to come in and finance a business as well? Very important to look at. I don't want to exclude my asset-based friends. So we're looking at conditions of the balance sheet, history of profitability, what does the forecast look like, bankers always like to see forecasts if they can get them. What are the prospects of the company? And lastly, and probably the most important, is what is the management team, what are the people like? Really it's a people business. People pay me back. And so I think, understanding who they are, what's their experience with this process, have they been in business for a while, things like that as well.
Okay. Why would a business owner choose to work with a community bank versus like Wells Fargo or Bank of America or something like that?
Well, I think as you look at, the banks offer a variety of product sets. That's the good part. You as the business or the customer can get some choices. I think in the bigger banks, they tend to be more production oriented, I'd call it, having been around some of the product managements early on when they develop these type of products. They tend to, how many transactions can they run through a center, and how efficiently, how cost effectively can they deliver their product set. And this offer is actually good sometimes for the borrower because they get a line of credit. Like I said, it's more like a giant credit card checkbook they use. There's really not a lot of touch. Not everyone wants contact with their banker. The community banks, which are more tied into the local community, the local business people, tend to take a look at what your line of credit, what are you going to use it for, structure a little bit more. Maybe they'll stretch. They're not so rigid on the rules. They're still not going to do anything outlandish, but they're going to be looking and being a more customized solution, I say. They're more likely to call you, but the trade-off is you're probably going to have to give them a little bit more paper in terms of reporting. But that's not bad either, because now when you have a need, the bank that's probably able to respond a little bit better is the bank who's known you a little bit more. So each one has its pros and cons, and each fulfill a need here in the community.
Okay. Let's say you're starting a small business and you can't really qualify for a loan. What are some alternatives that these people have to get some financing?
Well, Mike, that's a serious issue for a lot of people, having now worked with a lot of small business owners, and some are very close to me. I call it more the micro business or the micro lending and micro enterprises. And there are people that are just trying to get the capital together to keep their business going. They have, as part of their issue is that they just don't always have time to look at all their options. But I think, we have developed out there in the community a series of options which are very good for them, which is things like SCORE, which is retired executives who come in and mentor and help you develop the business plan and look at that. As I mentioned, there are things like Opportunity Fund, and they have different names in different communities, but these are funds that exist with either government backing or banks backing who will make loans to small businesses. And I'm talking generally $50,000 and under, $35,000 and under. That was some research and some talking with some folks. I think there's a lot out there. We're also seeing predominantly, the studies and the reports are showing that credit card debt and using friends and family continue to be popular ways, not always the best ways, but I would encourage people to look around because I think there are more and more programs, being things like the Lending Club and OnStage, as I mentioned, I've been reading a little bit about, that are out there for the micro business person.
You have any thoughts about crowdfunding?
Not really, because I haven't seen it in the traditional segment as much. I've heard and read a little, but I'm not by any means an expert on it. So I think to each their own and how they get there.
Yeah. My son has used some of this because he developed a game that he wanted to market, and so he needed basically to get some capital, like you said, to be able to fund having the game produced and then go out and try to sell the darn thing.
Well, and I think that brings up an interesting point, because what you have a need for different types of funding. Bank funding is one area. You also have a need, which crowdfunding more plays into, is equity or investor type funding, an angel. Because it's what I call patient money. It's not somebody demanding to be repaid, and it's also going to take some more risk.
And some of these are actually, in a sense, a gift.
Yeah.
And it's also it can be like a marketing technique. So, for example, he was, you provide so much funding to me, and then you'll get, X DEXA cards and so forth. So, and another one that it was actually a very big project was Neil Young. So he was doing crowdfunding for, he was coming out with a product called the Pono. The Pono is like a super MP3 player. And so you put up $500 and you get be one of the first people to get one of these Ponos. And he raised over $1 million. So it doesn't have to necessarily be dinky.
No, it's not always.
But like I said, he was using it in a sense, I think, as a marketing technique, because it was a way of distributing, getting some of the first Ponos out into the marketplace.
And maybe also deferred risk to other people. So,
sure. Yeah.
For us, I look at crowdfunding or the angel. There's obviously clearly an active community here with that. We're very fortunate.
Yeah, we do have.
I think
we're in the heart of venture capital country here,
right?
And there are angel investors in addition, like you said. I mean, they may be individuals and so forth that you can go to.
Yeah, so there's a lot of different sources for business. It's just kind of matching up what makes sense and what makes sense for your project.
What are some things that you think that somebody like that might be looking for? I'm talking about an angel investor. So if you were going to go to an angel investor and with the business idea or whatever.
I think clearly they're looking for a market. I mean, I'm not an expert on it, so I don't know. I mean, that's kind of where you get to people who help you coach on the business plans and all that. Angel investors are clearly willing to take some risk because they're usually early in. So, but I'm not an expert on that one. If it gets beyond bank lending, I kind of have to turn it over to somebody else.
So maybe you can tell us a little bit about some of the clients that you've been working with.
Well, I think there's a large variety of people that we work with, and it's really hard to describe them in.
Well, I'm just saying, maybe So we've got about 10 minutes here, Paul.
Yeah.
Maybe you can give us a case study, a few examples. About how you've helped some small businesses.
I think there's one well-known client that they had their name all over when we were Comerica. So it was a sports beverage company that they need to turn their powder form into a liquid form and help provide the financing for that. And in doing so, it slowly started to appear in grocery stores. Today, it is over $400 million in revenue and just sold for quite a bit of money. Sold actually now a few years ago for quite a bit of money. So these are the type of things that financed and other. There's a list of companies that are out there that I think, particularly, I could say, I've been involved with. I think a lot of the companies that I work with are generally privately held.
So
they're not going to be out there getting the splashy headlines.
Okay.
And sometimes it's kind of hard to talk about them. So that's.
But within the bounds of confidentiality, I understand that you can't put the client's name and numbers in front of us.
No.
But maybe you can tell us in general about some of the ways that you've helped some small businesses with their financing.
Wow.
And then also you mentioned some of these partners that you have. So
yeah,
tell us a little bit about that.
Well, I think what you get into as a business owner, one of the things to develop is a team of trusted advisors.
Okay.
I mean, you as a CPA would be part of that team. I mean, I think you would say there's some value to having someone who can also coach you on tax, your accounting, capital equipment. Is it wise to buy it? What's going to be the impact on your business and your financial statements? Are there tax credits available? Things like that. Again, if a company may not qualify for conventional financing, is there another outlet for it, such as an asset base or a factor? Very fortunate, I work with some people who do that, more collateral-based lending. But that it, is there other forms? It's just not a very narrow view of the world. You also look at, again, private equity, angel, working in more of the middle market. You get into mezzanine financing, which is, again, typically done beyond what banks would do because it doesn't have the collateral backing it up. It's in a subordinated position. But those are things that usually in a bigger middle market companies you're going to find. Private equity, again, we've seen that come into consumer companies where they're able to get additional working capital by taking on an investment. And the same thing you'll see the tech companies, but there it's venture capital. Mm-hmm. Kind of a different objective and reason to do it. And in tech you have some different things, characteristics to it. So I think the partner list that you talk about is just other different financial service providers, professional service providers, be it an attorney, be it a CPA. And there really is, can you form a team of folks, in addition to the bank, and it's just who can give trusted advice. I've seen companies do very well. I've seen some phenomenal turnaround in companies where they've taken in a board of advisors. People who have an expertise in their industry, who maybe are retired executives or something, they form a board of advisors, get some advice. And at the time they may be struggling a bit, but within a few years I've seen them go to the top of their game and make more money than they ever made before. So much that they really don't need me, the banker, anymore because they're not borrowing, but they also have just grown the business and have succession planning, taking care of tax issues, accounting issues, things that small business owners, sometimes just can use some help with.
Uh-huh. So this sort of gets back to, there's a concept in Think and Grow Rich, of the mastermind. And so it's sort of along that idea that you're talking about. And I know at Silicon Valley Chamber of Commerce was one of the things that they were trying to do for a while. I don't know if it's such a big thing now as it once was, but they were trying to help people sort of to put little teams together, their own little board of advisors, like you said, their own, like you could say, mini board of directors, if you will.
Well, I think if you look out there, it's not just that, or there's other organizations which the CEO sometimes finds themselves isolated. Mm-hmm. And who do they talk to? And then they match CEOs with CEOs so they can talk to them as well and get mentoring. The idea is that we can all use a good idea every now and then and use someone to kind of bounce ideas off of. Mm-hmm. And again, I think that just building up a team of professional advisors is always a good thing. It allows businesses to get some different input to help maybe steer strategy or something like that. You've got a lot of people who are very good at making the product or selling the product, but some other areas they may not think about that someone can bring to their attention.
Right. So here's a little something from a selfish standpoint as a CPA. So what are you looking for in the way of the type of financial statement, type of financial information that you're getting from your clients? Are you looking for audits? Are you looking for other types of financial statements, or do you care?
Well, yeah, I care very much. And I think, Mike, what I would say in some of those, looking for reviewed statements or audited, yes, I do care. I do care who the CPA is. I do care if they've passed a peer review. Mm-hmm. Things like that are they known to us? Those are very important characteristics. The type of CPA statements that generally, it really kind of somewhat depend on the amount of the debt, maybe the industry, what are they doing with it? Or are they positioning themselves for future growth or future sale? So that it is easier many times to start earlier getting a CPA to do a reviewed statement. It's actually cheaper and easier than to have to make, all of a sudden many companies find themselves selling and then having to turn the past 3 year statements into an audit, and that can be a very expensive, time-consuming process. That said, I could say that once upon a time I could recite guidelines to you and then say, at this mm-hmm. dollar amount you're going to need this, at this dollar amount you're going to need that. I think it varies. Uh-huh. And generally, if you're getting above $3 million in debt, you really should be using a reviewed statement at least. If you're going above 10, the thought used to be that would wear an audit statement. I'm not going to say that happens all the time. I don't want anyone to tie me down and say this is what I said, but uh-huh. Those are some general guidelines. Compiled statements, they're nice, but as you know, that doesn't give me some assurance that someone's really independently reviewed the numbers. So,
right.
I'm looking more on the reviewed and the audit. Those are nice to have. I'm also looking at their tax returns, because tax returns do contain a lot of information for me.
Okay. So we just have maybe a couple minutes left, Paul. Maybe you have some final thoughts that you'd like to share about, working with the banker and small business financing in general.
Well, I think for the small business owner, again, finding a banker that they like, trust, because really this comes down to a relationship between the banker and the business owner, where they both like and trust each other and value each other for what they bring to the table. I think that what you're going to get, if you've got a good banker, is someone who's going to help guide you through the process, who's going to be a sounding board. They're not always going to say yes to everything. But they may be able to offer alternatives that you didn't think about, or say, have you seen, hey, I got somebody else something, or seen something similar to what you're doing. Have you thought about this approach? And then I find that over a period of time, the good bankers also not just going to look at loans, but what we haven't talked about is there's a deposit side of this equation. And there's a lot of things happening, and that's where more change is happening than on the lending side. That on the deposit side, there can be some time-saving things put in with working with the computers, their accounting system, things like that. And also, another big area we haven't talked about when you talk about small business banking is fraud prevention. Again, that falls mostly on the deposit side. Is that banker working to help you take a look at some of your fraud prevention areas? Because, frankly, the bad guys are getting more and more, and they're trying harder and harder to get your money. So there's many areas. Can the banker bring his toolbox, or his or her toolbox, to the table and help you solve problems? Okay.
Well, Paul, we're out of time. So I want to thank you for joining me as my guest today. So folks, I hope that you've gotten some good ideas, some good insights about small business financing today. And in the end, you need to go to your banker and hopefully build that relationship. We see you next time on Financial Insider Weekly.